All right, nice to see you all. How are we doing this evening? Welcome to another JK Deal Reveal. Nice to see you on here. Steve, Paul, Maryse. Excellent. We're trickling in. Thanks for being on time, actually being ahead of time. We're going to get started right now. It's 7 o'clock. Today, we're going to hopefully do the fastest JK Deal Reveal to date on a per property basis. We'll see how it goes. Obviously, I do these on the fly. That's the point of these, is to show everyone how quickly we can get a grasp of a property and immediately get a sense of where we need to start our negotiations to even see if it's worth our time or just what kind of negotiations we're going to be in. Are we going to go into a very quick and just lock it up? Or are we going to basically be very patient in how we negotiate to eventually get to a point where we get or create that best deal? So let's get started. This is the JK Deal Reveal. I hope you are excited, super excited. I know I am, because we analyze deals lightning fast in markets that are not Canadian and with some potential that is far superior in many instances. Because ultimately, we just want to invest where the numbers make sense. If you're not looking in your backyard, why don't we look to somewhere where the bang is the biggest? That's basically what the JK Deal Reveal is all about. And today, we're going to be analyzing the Brownstone portfolio, which is a portfolio of 18 properties, and asking $1.3 million. Now, in Toronto, you wouldn't, or in Vancouver, you probably wouldn't even get one property for 1.3 million. And here we have the opportunity to buy 18 all at once. And let's see if the numbers make sense. Might sound like it does right out the gate, but we're going to find out. As always, we're basically trying to figure out lightning fast, is this a deal or is this not a deal? So let's begin right from the get-go here. I was given documents. Oh, I forgot to say this JK Deal Reveal was submitted by Vera, and so thank you, Vera, for your submission. And let's just take a look. So two documents were provided for this deal reveal, and let's just take a look. What do we have here? Portfolio of 18 properties for sale. That's basically all I've looked at so far. 1.3 million. This is a cash flow investor's dream. Brownstones is a single member LLC that owns properties. 19 properties, 19 doors through 18 properties. I mean, there's one duplex in there. These these properties are rented and performing. They've all been renovated in the last 5 years. Excellent rental history in suburbs of Cleveland, Ohio, and stable, long-term, fantastic. They're advertising here. If we look, 1.3 million. The average price per square foot about $61, and a cap rate of 12.16%. All right, well, that's looking pretty good right out the gate, right? If they're asking 1.3 million and they're advertising a 12.16 cap, that means this portfolio should have an NOI, a net operating income of $158,000 per year. That's what we are basically putting in the back of our mind for now. That's what we should be getting with our numbers. So let's take a look. What else do we have here? We have the total square footage, number of properties, and a bunch of pictures. Oh, here's a map of the distribution of the properties. So as mentioned, we're in the suburbs of Cleveland, Ohio. We basically got a Brooklyn, Lakewood area on the west side. The bulk of them are in Maple Heights, with a little bit in Cleveland. The Beechwood area, this probably in Cleveland Heights. We got a couple in Euclid up here as well. So absolutely, this is primarily in the suburbs, which immediately, I'm not too concerned about the crime, although we will probably take a look, just because if you're not familiar with these areas, you probably should get at least a general sense of what Euclid, Maple Heights, Cleveland Heights, what does that mean in terms of crime? But I'm telling you right now, those areas are very low crime. These are the suburbs of Cleveland, which are fairly nice. If you scroll down, it's going to give you the size of these properties. Okay, that's all fine. And then a bunch of pictures. And honestly, this is how quick I'm going to look at the pictures. Okay, they look clean. They look nice. So two things come to mind. Wait, are these tenanted? So these are obviously probably not ultra recent pictures. These were probably the pictures that were done as soon as they finished their rehabs. And so they're probably not in this condition anymore necessarily, but they were all recently renovated in the last 5 years, so that's good. So that's how quickly I'm looking. I'm just getting a sense of what's happening. And that's the first document. We're done. Next, The next document that was submitted is a summary of the financials. Wonderful. I love financials. So we got the full list of the properties here with their suburbs. So again, we see Maple Heights, Euclid. Oh, there's Garfield Heights, Cleveland, Bedford Heights, Garfield, Euclid, Maple, Cleveland. So there they are, all suburbs except for 2 in Cleveland, if I didn't overlook here. We got the expenses, and basically we have the annual gross income adding up. What else? The distribution of the properties per the city with the average taxes, average expenses, all that fun stuff. Here, they're just really emphasizing that there's property taxes on these properties. That's wonderful. And the total expenses. So they say that there's a total expense for this portfolio of $56,000. All right. And what did we say? This portfolio should be generating net, according to them, $158,000, and it has $56,000 in expenses. Okay, well, that basically means that this expense ratio is very small, right? If net you're generating 158,000 and the expenses are 56,000, that means total, if you were to add the net with the expenses, you should get the gross, right? You should get the gross. So if I add, say, 56,000 real quick, we're basically getting a gross of 214,000. Now that might be true, it might not be true, but what I'm trying to point out here is that if you have a gross rental income on residential properties of 214,000 and expenses of 56,000, that should raise a flag. That should be a flag for you that the expenses are too low, right? Because what is the ratio between the NOI that they say this portfolio is generating, which is 158,000, to the gross income of the portfolio, which is 214? What is the ratio? It's 74%, which means the expense ratio is 26%, all right? And you'll remember, if you've been on these JK deal reveals for a while, that there's a quick rule of thumb to quickly get an idea if these numbers are completely out of whack or not, and that's the 50% rule, right? In suburbs of Cleveland, I like to stick to the 50% rule. I don't do the 55% rule, well, like I do with inner city Cleveland. These are suburbs, so I'm really going to stick to the 50% rule. So if a portfolio is generating 214,000, I'm expecting a 50% expense ratio, okay? 214,000 gross with a 50% expense ratio. I'm expecting 107,000 of an NOI, not 150 something. There's almost a $50,000 net bottom line NOI difference on what I expect this portfolio to generate and what they're presenting here, all right? So that's why I said it's a big flag. So let's see where it went wrong, because I'll remind you that this portfolio is being advertised as a 12 cap. So let's just take a look. Let's take a look at where their expenses are coming from, right? They're saying there's 55,000 of expenses on this entire portfolio, 56,000, pardon me. And so let's see where that's coming from. So we have property taxes, wonderful. You've got maintenance, wonderful. Now this maintenance budget, I would say, is a little skimpy, I like to be more conservative and say $100 per month per property if we're talking about a single or a duplex or a double. So that maintenance budget, I'd like to have it in the 1,200 range, just to be more on the conservative side. And it factors in some of the CapEx as well that's going to come into play in the years to come. Okay, but maintenance, it's there at least. We have water and sewer at 0. Okay, now does that 0 mean that the tenants are paying for water and sewer? Which does happen with single family, and you see here, this is probably the only duplex of the lot here. Yeah, it is, with this type of monthly rent. So the only duplex in the portfolio is the one that has a water and sewer bill. We can assume, but we need to clarify in our first conversation with the seller, does the tenant in fact pay for water and sewer on all these properties? It's looking like that. If everything was 0, including the duplex, I would be like, this might be just a fishy presentation, but that's probably what it is. We just need to clarify because it will change the numbers. Okay, water and sewer, that's wonderful. What about gas and electric, right? Most likely tenants are paying that as well, but we need to clarify because it's not even on this sheet. Fantastic. And then we have property taxes and maintenance and water and sewer, and then total. If you just add them up, you see that their total here is property taxes plus maintenance. Okay, are there some expenses missing here? All right, write it up in the chat. Right? Are there some expenses missing? Because that's all they basically put in here, right? Property taxes, maintenance, and water sewer, which are utilities. We're far from the summit, right? We're going to trip on our way up to the summit, right? There's no management. Where's management in there, right? These are self-managed properties, didn't you know? So management, that's 10% of a portfolio that's generating about 200,000, right? That's $20,000 difference right there that they're not advertising. So wonderful, that's management. What else is missing in here? Insurance, fantastic. Where's the insurance? We don't need insurance, right? Insurance is not there. That can range between $700 and $1,000 per year per property. So you add up 18 properties, there's another basically $18,000 that's not being shown on this expense report. Wonderful. What else is missing? The repairs, right? In the maintenance, repairs and maintenance, I do find it's a little slim. So if you bulk that up, yes, you would factor in the repairs in there as well. Obviously, there's no mortgage. It's rare you see a mortgage payment or analysis on these type of reports. We're going with a flat cash lien, and we're comparing cap rates, which are basically comparing with cash purchases. So the fact that there's no mortgage payment on here is normal. That's fine. Do your own calculations to do your numbers on that. And there's one category missing. One category, Summit. Whoops budget. That's right. Where's the whoopsie budget? Where's the shit budget, right? So I'll remind you, Summit. You got the shit, utilities, mortgage management, maintenance, insurance, and taxes. So the shit. They have a teeny weeny shit budget here, okay? They actually take into account a 2% vacancy rate, all right? So they are factoring a little bit of shit, just teeny tad bit, okay? But honestly, I think that's too low. I will say it's too low just so you can pad your numbers and you're making sure that even if things go awry, you've got that little buffer in place, okay? So I like to say probably 25 or 50 bucks per month per property just for the shit and the oopsies, okay? But some people put 0 in that budget, some people put 50 or 100. That depends on you. I would just stay consistent in all your deal analyses so that you can compare your own properties one-to-one. So stay consistent there. So basically, we're missing a whole bunch of expenses here. And let's just see, what would I do with this type of portfolio? I'm not going to run through all these properties. I already know their numbers are crap. So I just want to have a conversation with them so that I can see if it's just their numbers or the person is crap as well. So I just want to get a feel for who I'm dealing with before I spend literally an hour. Even if it takes me 5 minutes per property, 5 minutes times 18 is over an hour. Am I going to spend that type of time when they're already presenting me with something that's misleading? No. I have a general sense. In this particular instance, I'm going to pull out my calculator again. They're saying it's 214,000 gross. I'm going to use my 50% rule. I'm expecting this portfolio to generate $107,000 a year in NOI. If I'm interested in buying at a 10 cap, a real 10 cap, I divide by 10%, by 0.1. So that would mean I would be offering somewhere around $1 million and I would be buying a 10 cap, a real 10 cap. If I'm a little bit more aggressive in my offer, I might be interested only in buying a 12 cap. Okay, so I'm going to divide by 0.12. And this time, if I'm going to buy this at a 12 cap, I'm going to be around the $900,000 range. Okay, maybe you're a little bit more aggressive and you only buy 15 caps. Okay, you take your NOI, you divide it by 0.15, and you'd be around the $700,000 range. Okay, so these are kind of the numbers that I'll have in mind when I call them up. When we get to a point, I'm gonna build a relationship. We're gonna discuss maybe 1 or 2 of the properties in depth, and I'm gonna challenge the fact that there's some missing information and missing expenses. But I'm not gonna go through every single property. I'm gonna go through 1 or 2 in depth. Maybe take the 5 minutes it needs, and then I'm going to basically, in my mind, I'll be somewhere in the $700,000 to $800,000 range to place my first cash offer. And then from there, we will start a negotiation, we'll start the process, and we will go into either a drawn out negotiation, or we'll go back and forth and we'll bring in some terms, and we'll see what the situation is to make the very best deal for both ourselves and the seller. Okay, so that's basically where we're at. So let's just take a look. Okay, one last thing. I'm basically done the deal reveal at this point. I've done my preliminary analysis. I don't want to waste any more time before I actually get the beat, the real beat from the seller at this point. Okay, so that's the point of the JK deal reveals. Don't waste time in analysis paralysis. Do what you have to do, get a sense, and jump in there and start the conversation. I just want to point out, I want to do one last calculation. They were advertising this portfolio at a 12.16 cap. What is it most likely in reality? Okay, I'll do the numbers one more time. If this portfolio is generating gross $214,000 a year, with the 50% rule, we can expect it to generate $107,000 a year. They are asking $1.3 million. So this 12 cap that they're advertising is closer to an 8. Okay, so an 8 and a 12 in my mind are radically different in terms of my excitement level going in. All right, I saw the 12, I'm like, wow, that's wonderful. I would basically say, if you can start your negotiations, if you can look at properties and portfolios that are at a 10 or above, a real 10 or above when you get started, those will be the lower hanging fruits to get to the 12, the 13s, the 14s, and maybe, you know, a 15, when then with some creative terms on top. So hopefully this was helpful. So as we're talking right now, okay, is this a deal or no deal right now for you? This is an 8.2 cap, 18 property, 19 door portfolio in suburbs of Cleveland. Now, let's not forget that suburbs are much more desirable and the ticket price is a little higher. That's another quick analysis that we can do. If we're asking $1.3 million and there's 18 properties, what is the per door price? We're at 72,000. Okay, 72,000. That number eventually will mean something for you in these different suburbs. For example, 72,000 is in Cleveland quite expensive for a single family home in inner city Cleveland. In suburbs like Maple Heights and so forth, it's pretty much right where it should be for a turnkey property. A little bit expensive for my taste, but we don't want what's average either. So it's a little expensive. In Cleveland Heights, I'd say this is normal. In Euclid, you know, it depends where in Euclid, but this number will mean something for you in the different areas. So deal or no deal for you? No deal for Maryse. Okay, Maryse, no deal yet for Wendy. Yet. I like that, Wendy. Wonderful. Steve's going to pass as well. Well, I mean, don't take out your checkbook and write up the check, right? But this is just not something that we're going to, you know, be super excited right out the gate. We are going to do what we need to do and jump in, introduce ourselves, build that relationship, see what the seller is needing really. Is it a quick sale? Do they absolutely need that price? What is their story? What's the context? And eventually we might be able to create a wonderful deal. Because what if I told you that this particular portfolio, we were able to buy it at 1.2 million? You'd be saying, well, not really. It's probably a 9 cap at that point. Okay. But what if the seller was financing 40% of that? Well, I don't know. What are the terms of that seller finance, right? Well, what if the seller was willing to seller finance at 4% in second position, and then you can get bank financing in first position, and all you need to bring to the table are the closing costs, right? Well, then it becomes more of a cash flow analysis, and we need to make those numbers. So this could be a home run, right? I'm just saying it's not a home run on a cash purchase with the current numbers. That's all I'm saying for now. But we've already spent the 10 minutes to analyze the deals. Spend the next 5 minutes to call up the seller and get the full story and enter into a soft negotiation. If you don't pick up the phone, if you don't send the email, if you don't take action after you've analyzed this deal, any deal, you have wasted that 10 minutes. And I don't want you to waste any of your time. So wonderful. Yeah, that's it. That's the JK deal reveal. I'm going to say for now, this is not a deal for now, but it could certainly become one There's a JK partner, I don't know if they're on the call today or not, but they're negotiating a property portfolio of 25 properties. And there was a lot of similarities with this, but the seller is actually seller financing 100,000 of the $700,000 portfolio. All right, so there's a seller carry of about 17% of the sale price at 0%. All right, no interest, direct principal pay down for 25 properties. I mean, you make the deals happen. That this was something that worked for the seller, it works for us on the cash flow numbers. Well, just make the deals happen. So basically that's it. I want to thank you for your time. Hopefully this was helpful. As a JK deal reveal, we have an exciting 2-day virtual masterclass coming. It is going to be on November 28th and 29th. We're going to bring all the foundations of U.S. real estate investing to you. Hope you can join us. If you haven't already registered and booked your ticket, registered your spot, it's n4tblueprint.com. There's a whole bunch of bonuses that come with it this time around, which we've never given in the past within the ticket price. We're giving you the e-course, basically 15 hours of content with all the best practices for Canadians investing in the U.S. You get access to our premium mastery calls, which are every Thursday at 8 p.m. So right after this call, I jump in there, and it's basically this group coaching, Q&A. I also give little mini trainings, mini nuggets of 10, 15 minutes in each call as well, additional training. Our resource centers in there, all of our past trainings, all recorded, all in there for you to take advantage of. So hope you can join us at the next workshop, which is n4tblueprint.com. If you want your deal featured on the next JK deal reveal, this is how you do it. You have our email address there, or go to our website, nowfortomorrow.club, and in the contact form, just put in your name, the property address, or the portfolio details, and we'll put you in the queue so we can feature you next week or on the next JK deal reveal. So hope you have a wonderful evening, and it's time for you to do Now for Tomorrow. Take care, everyone. See you soon.